So let's get going with our first guest on the show. We have Jahangir Aziz, Head of Emerging Market Economics Research at JPMorgan, joining in. Jahangir, good morning and thank you so much for being with us. So much going on in the world and so much in our neighborhood as well. So just put it all together for us. I mean, things are shifting so quickly. You have this geopolitical risk here in India. I don't know whether at some point in time that needs to be baked into, overall financial estimates. And then you have the trade negotiations with US and China progressing along. Tell us if you think that there could be a breakthrough here. And amidst all of this, I mean, how do you see India placed?
Look, I mean, clearly, the global financial cues are going to be the big driver, and the announcement that US and China is willing to at least initiate talks has been a positive news. We need to wait and see what exactly comes out of that meeting at the end of this week. For my end, I think that establishing who is going to negotiate on behalf of the US and behalf of China is probably the key sort of signal that I'm expecting from that meeting. Once you have established who the key negotiators are, then at least you know that the two sides are serious about talking and putting together a framework. I don't expect any discussion on what the framework or the parameters of the discussion would be. My sense is that, if we get simply the names of the key negotiators for each side, I think that would be a big positive move coming out of this weekend's US-China talks.
Okay, fair enough. Jahangir, good morning. Good to have you with us. And there's always so much to talk about, right, nowadays, especially with regards to trade. This UK deal, US-UK deal, which many publications like the New York Times are saying we'll get to see today, will markets parse through it to sort of see the amount of give and take, which is possible, the amount of leeway there is, and kind of sort of use it as a template? What's your sense?
So I think clearly it's important for for India, right, and for the US in the context of bilateral trade. What is happening on what kind of parameters or what kind of template, as you pointed out, we get of the US-India trade deal. But I don't think that globally has that much of importance. What really is important, or what global clients are looking at, the global financial markets are looking at, is what happens to the US-Japan and the US-Korea, but particularly the US-Japan trade deal. Because in the US-Japan trade deal, there has been a rumor, and this has been floating around in the market for quite a while, is that exchange rates will become part of the trade deal. And people are waiting to see whether or not financial variables, particularly the exchange rate, becomes part of the trade discussions. I don't think that is going to be critical in the US-India deal. And I think that is what really what the market is looking for, because if that becomes part of a country's trade deal, then all the rumors that you've heard over the last 1 week, what happened to the Taiwan dollar and what's happening to dollar CNY, etc., people will get much more faith that all of this is happening because there is some sort of a discussion about, some form of Mar-a-Lago deal that's in the offing. That's not a base case, but all that I'm saying is that the eyes will be on the US-Japan deal to see whether or not exchange rate and exchange rate management is part of a trade deal.
All right. Hi, Jahangir. Good to see you in, as always. Jahangir, what do you make of what the Fed chair, Powell, had to say overnight? Some read it as a little bit more hawkish than what they expected, but he said risks are on the table post these tariffs, and the markets are still to digest that. What was your reading?
So I think, broadly, everybody expected the rates to be unchanged, right? So that wasn't a surprise. I think people were also expecting a change in the language on uncertainty. So in the last two FOMC meetings, statements, they simply said that the outlook was uncertain. And I think there was a assumption going into the FOMC meeting that they would change their language on uncertainty and add words like increased uncertainty. And that's essentially what we got. And I think that is probably the most important shift in the language that we got from the Fed, is that they now see uncertainty to be increased, both in the inflation front as well as in the unemployment front. And I think that essentially means that given, so far, there hasn't been any real evidence of that, apart from the very high import numbers, that the tariff policy is having an effect on U.S. growth or U.S. employment. That remains very, very solid, or on retail sales. But if you take that, the backward-looking data is still very solid. The fact that the Fed is saying that both on the employment front as well as on the inflation front, they see increased uncertainty, it just suggests that the Fed is, in a wait-and-see mode for a protracted period. And I think that's the inference that we are drawing from today's statement and from the press conference, that the Fed is here for the long haul.
So, Jahangir, exactly on that point, let's ask you what you're expecting at this point. So we've got, 20 days of May left, then you have June left to get these deals done. Do you think that'll happen, first of all? And secondly, I'm sure it's hard to guess, but what is the blended average that the U.S. might be at as these deals get negotiated? And then, therefore, what's the impact on the economy you're penciling in?
Look, you're asking me things that I have no idea whether or not these things will be done, right?
Yeah.
Look, what we can make out is that these deals with these 14 or 18 countries is going to be done in 3 different phases, right? In the first phase, you have India, you have Japan, and you have Korea. We haven't seen any deal being announced. So maybe the India deal gets announced sooner rather than later, especially given the fact that India's already announced a deal with the UK this week. But as I said, critical is what is it that they announced with Japan? And once those deals get done, then you go to the second set of countries, which presumably we don't know whether or not that's, whether exactly what the sequence will be. Presumably is going to be UK, is going to be Euro area, etc. And then we go to the rest of the, countries in particular in Asia, who are the manufacturing exporters. The point I think one needs to realize is that these deals are not going to be detailed announcements of exactly what is going to be done. As Secretary Bessent has already said, these are most likely going to look like sort of, letters of intention, right?
MOUs, Jahangir.
MOUs, yeah, that's right. Then we have to wait for what the actual details are, right?
But Jahangir, trade and investment needs more than just letters of intent or MOUs, right? So my simple point is, U.S. economy by the December quarter, last quarter of the year, what is the sort of deceleration you're penciling in?
So we do have a second quarter growth rate actually turning positive, simply because you are not going to see a 51% increase in imports being repeated. You're going to see a negative number of imports. That itself should be able to give you a reasonably positive number over there. But we have as a baseline a recession in the second half of the year, with both the 2 quarters, Q3 and Q4, turning negative. And then the recovery starts in 26, with the Fed reacting to it in September by the first rate cut.
Got it. All right. Jahangir, we'll leave it there. Thank you very much. Good speaking with you. Thank you for coming on. And till next time, goodbye. Appreciate it.